And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, futures family. It is time for the Market Prep Wednesday, May the 24th. My name is John Hoagland. Thanks for trusting me with your time. As always, our focus is on seeking accurate context, always thinking about risk management, and remaining patient in our trading. This morning, as far as economic numbers have come out, 6 o'clock Central this morning, then mortgage rates came out. The 30-year mortgage rate rises from 6.57% to 6.69%. Applications, which last week fell 5.7%, only fell 4.6% this week. 9 o'clock, we have State Street Investor Confidence Index, not expected to be highly impactful. We have Janet Yellen speaking. Janet Yellen will be yelling at 9:05 this morning. 9:30, the EIA Petroleum Status Report. 11:10, another talking Fed Waller is speaking. And then we all know we're waiting for the FOMC meeting minutes at 1 p.m. Central today. So a little bit of information out there coming at us. But as you can kind of surmise, I'm kind of thinking that investors are continuing to increase their anxiety level as the debt ceiling saga continues. VIX is approaching monthly highs. The monthly high was just over 20. It seems to be headed that direction. U.S. stock indices are set to open lower, anywhere from a third to a little over 0.5% lower this morning, in continuation of yesterday's weakness. And yes, today we do get a look at the minutes from the last FOMC minutes, but excuse me, the real focus, as I'm sure we're all aware, is on the debt ceiling negotiations. Crude prices continued higher on supply questions or worries after the API last night announced a 6.8 million barrel drop in inventories. The EIA forecast that I'm seeing is a smaller drop of about 1 million barrels. The VIX, last I checked, was up about 5.3% at 1952. Dollar index pretty much flat at 103.48. Dollar index was 103.50 yesterday, so no major changes there. The VIX yesterday was at 1777 at this point in the day yesterday, so 1952 now. And the yield on the 10-year down slightly at 3.69%. It was 3.75%. Yesterday at this time, as usual, I'm going to ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel so you can get the notification when we do go live. Yes, James, that's 9:05 Central Time for Yellen, as far as we know. That's the only. Well, her and Waller are the only talking Feds that I see on any schedule this morning, but they do tend to kind of pop up out of nowhere sometimes. So, you got to keep your eye on all of that. Keep your eye on anything related to the debt ceiling negotiations. Of course, we are, looking forward to some sort of resolution for that. Come on, guys, let's get to a compromise and let's get this done. Good morning, everybody. We got Stephen Van first in the room, winning the prize this morning. Good morning, Stephen. Shaw, good morning. Yeah, VIX, greater than 19 this morning. George. Lacey says good morning to everybody as well. Bear goes long, good morning. The Rooster, good morning. Pete, Jason, check your email. Henry G, Haggle Matters, Bill Phillips, Jason talking about the delta divergence that worked for us yesterday, as well as the overnight session. Was going to be talking about that today when we get to the charts. Nasdaq, good morning. Chad, saw and he conquered. Tom, Brian, my brother Tom, good morning. Good to see you. Love you. Ryan, DA, Caesar, James, Teo, Will, Matthew, Philo, Beto, Right Turn, Clyde, Andy Bleed, Kevin Laffey, good to see you here this morning. James, Robert, Jason, Sarah Hall, prayers and love to you as well. James Hansen, yes, Taurus Trader, and Denise. Haven't seen you for a while, I don't think. Denise, thanks for popping in and saying good morning to us. So it is Wednesday. Good morning, Barrett. Maybe a couple of new names there I'm not sure I've seen before. Today's Wednesday, so I want to put in the link for group coaching, which is at 12:30 today. I don't have any emailed in questions here just yet, so I'm looking forward to seeing what we've got as far as questions are concerned on the fly. It doesn't matter if we don't have questions. We always seem to get into a really good conversation, and hopefully it'll be impactful for everyone. George Diaz, good morning. Jorge, Kao, however we pronounce that, I'm not sure. Trying not to mispronounce anything too much here this morning. There is the link for group coaching. Get registered. We do it every Monday and Wednesday. It's a long list that you're going to be sent, but just keep that in mind and come and spend some time with us on Mondays and Wednesdays, 12:30 to 1:30 for group coaching. Phil, good to see you. Trading Research. Jorge Duque, good morning. All right, so we also have Make Hogue Money at 2 o'clock today, the afternoon session. Yesterday, we were trying to stay long. We had like 3 consecutive losses. We had a long on when we finished Make Hogue Money. That ended up getting stopped out. But later in the day, when I started to notice the delta divergence, I got a short and made all the money back and then some. So we had a good trade in Make Hogue Money on the other side, but just kind of recovering what we lost yesterday and then having a nice tidy little profit after that. So that's good news. We'll see what we've got for us today at 2 o'clock for Make Hogue Money. All right, let's jump into the charts here and take a look at what we're seeing so we can get down to business. Be prepared for the open. Here's the E-mini S&P's daily chart. Excuse me, my goodness. All right. Continuation above the previous balance fails. We broke out, we've balanced, new things have come into the market. New questions, of course. The market has failed on that breakout and is now right back into the balance area that we were in for so long. The target for this is the lower extreme of balance, and really there's 2 lower extremes. Our weekly kickoff low, which is 41.20, I'm viewing as the first extreme of the excess to the downside, and then of course we've got the excess down here, down below 4100. So this whole area, it is probably being targeted, and there's some structural weaknesses down below this market. We'll see this on the shorter time frame charts. Yesterday, we had a pretty big down day. We had delta divergence. In other words, the more aggressive traders were buyers yesterday against maybe some bigger sellers, but we did not get what we were looking for as far as the open interest is concerned. We have an estimated loss of 12,000 contracts in open interest. So it's not like this was new selling coming in. This was old longs getting out. Now, if this is longer time frame traders, and check me if I'm wrong, the longer time frame sellers of this market yesterday were probably adjusting inventory and other levels. What were they buying yesterday? Were they buying underlying stocks, which we've been kind of assuming that they're underinvested in, looking for a bigger pullback? So everything that they do is, of course, hedged and adjusted for. I just find it interesting that we did not build open interest in the S&Ps, nor did we in the NASDAQ yesterday. Instead, we just got out of potentially longer time frame longs against shorter time frame buyers that are still holding some pretty substantial losses if we look at the delta, right? So this is the 30-minute chart. I'm going to make this really big so we can see it against the delta. So we opened here, okay, delta zeros at that point. And then we can see how delta continued to increase in positivity as price continued to move lower. When we see delta this strong in one direction, it leads me to believe that it's shorter time frame traders that are being aggressive using market orders to buy against some larger offers. Well, those larger offers are typically going to be some longer time frame traders. So we end up getting our short time frame traders too long up here, too long here. They finally started to capitulate around 1 o'clock yesterday when we saw the market extend the range to the downside, and then we just kind of consolidated the rest of the day. I still think we're holding some shorter time frame speculator longs that are currently pretty badly underwater. Look at the overnight inventory. We've got overnight inventory, which is short, which would be kind of opposing the theory that we're holding some shorter time frame longs. Perhaps this is some of those longs liquidating. We can see how delta has been falling off ever since the close yesterday. Now we're going to zero this out before the close or before the open, and we'll see what the delta does for us today. We can talk about all of this during group coaching, and we can talk about it during Make Hogue Money as well, if there is any kind of delta divergence for us to take advantage of. So, we were kind of looking for longs in all the wrong places yesterday morning here in Make Hogue Money. We took our lumps, we made our money back on this push to the downside, which was largely signaled by the delta divergence. Our shorter time frame, weaker hands, pea shooters like me were fighting this move to the downside using market orders, trying to get long, and just continued to get and take pressure all day long. That's the whole idea of the delta divergence. So overnight inventory, we're short. We're opening with a gap. Our initial first level target for a failure above is our weekly kickoff low, which is 41.20. Now look below that. We've got a gap that remains unfilled. This takes us to what we were looking at as an island bottom. We'll see this better on the TPO charts. And there's lots of unfinished business down here. Take a look at it on the TPO chart. So we have a double distribution, almost a triple distribution trend day to the upside, leaving the initial balance at the high of the session. We started coming back and taking care of some previously perhaps unfinished business. We have a repair area right here. We traded into it, our overnight low. This was really the target that I was looking for yesterday. I didn't stay in the trade to this point. Obviously, it didn't make it, but this anomaly down here and this anomaly down here were eventually likely to be targeted. Now, we have continuation. We're going to be opening with a gap. We have a relatively weak low here. We have a weak low here. We have a gap. We have a prominent point of control below that. We have lots of visual targets down below this market and in recent time frame. So this is what we're talking about when we're saying lots of weak structure. There's a gap here, naked points of control, naked points of control. lots of visual targets for this market to look for should things start to get ugly. Not suggesting that that is going to happen, but of course, as we always say, ECH, anything can happen. Anything can happen. So make sure you protect yourself, keep your eyes and ears open, trade what you see, but be prepared for potential changes that could happen at pretty much any time and in any direction. This market is high anxiety. It's like a sore toe. If you've ever had a sore toe, you can be pretty sure you're going to bang it on something. So any news is going to be impactful in the equities markets today. Take a look at crude oil. So we have new information, fundamental information in crude oil that occurred yesterday after the close at 3:30. The API announced again a large drop in crude oil inventories, 6.8 million barrels. So the market ended up pulling back to weekly kickoff low before the close yesterday, basically closing right on it, certainly in the range of it. And then the market got some new information and continued to push to the upside. So we're looking at a potential market state change here from downside range bound perhaps to a new leg to the upside. I'm not real happy about that. Just talking about what we're seeing here. The 50, the 100, and the 200 session moving average are stacked nicely as visual targets above price. We're trading at the 50 session right now. The 100 session takes us to, 46 about. And then the 200 session takes us up to about 77.50. There are some naked points of control above, we'll see. So this is a potential market state change. We're going to be monitoring for volume, participation, momentum, time. All of those things are going to tell us that the market is accepting above previous balance, which means we have to go with it. Take a look at the TPO chart. Hello, Elena. Will says, wear a parachute today. Yeah, Jason, we just touched the anomaly. Yeah, good morning, Vince. Dude, hello, buddy. Rusty Golfer, good to see you this morning. Trading research. Yes, it was ambitious. You're right, trading research. It wasn't a bad trade. We had reason for it. So crude oil just opening up here. Yesterday on the TPO charts was a normal variation day. Neutral. Okay, we didn't close the gap yesterday. That's a little bit of downside weakness. Lots of points of control and another gap down here, it looks like, which kind of got filled. No, this just got moved. I'll worry about that later. Weak low. I mean, there's structure above and below this market that bodes for revisiting. What about above? I just looked on my charts, on some other charts here. Back to the 30-minute chart, there's naked points of control above price, 75.15, 76.30. These are visual targets. If the market is, if traders are looking at those, they will bring price there. We have a gap. If we can't close the gap relatively early, especially on a breakout in a longer time frame market state, we're going to be looking for opportunities to trade this market higher. 9:30, the EIA comes out. We may not do anything until after that. It is entirely possible. Back to the TPO chart. It's an excess high opening above it. Are we going to accept higher pricing? If we can't close the gap, we are accepting higher pricing. Even if we trade and close the gap to kind of a close proximity, and we can't accept inside range from yesterday, we still have to look for opportunities to the upside. Anything can happen. Market loves to make a liar out of me. This point of control here is relatively prominent from yesterday. It may end up being a magnet, especially before 9:30, bringing our inventory back to even. We'll see what the EIA comes up with. and we'll make our adjustments from that point forward. Here's the NASDAQ. NASDAQ also lost open interest yesterday of approximately 2,700 contracts. Volume in both the New York Stock Exchange and on the NASDAQ here were higher. That usually happens when the market starts to look lower. Anxiety is increasing. The upside structure in the NASDAQ, I would say, remains intact for now in the longer time frame. Shorter time frame, obviously, we've got some downside structure beginning to build. There is a lot more stable structure down below here in the NASDAQ because most of the points of control on this move to the upside were revisited on the previous day. It's an organized move. We're, I think, a lot further from any kind of market state change to balance or a downside market state change in the NASDAQ than we are in the E-mini S&Ps. So, here's the 30. So we had a triple distribution day yesterday. As far as where we are this morning, we have overnight inventory to the short side. This is the only naked point of control that we have for quite a ways to the downside. We can fall into repair from, I think this was last Wednesday's session, where we already are down at this level according to last Wednesday's session in the S&Ps. And then looking back, all of the points of control, not all of them, but most of the points of control on the way down have already been revisited. That's some stable structure. Here it is on the TPO chart. So here's that last naked point of control that we're currently at. And then all of we got to go a ways, before we get to the next naked point of control, which is all the way down here at 13,050. All of this is relatively stable structure because the market hasn't left any really unfinished business down here. We get a couple of weaknesses here, some even lows here. This is a kind of an interesting level, which 240, it's kind of below that is where our current weekly kickoff level is. So the market in the NASDAQ is still holding up better, still a longer time frame upside structure, not really necessarily range bound. But again, after yesterday, we've put in a lower high and a lower low. Is that going to continue? What about gold? Gold is kind of on my radar here this morning. We got a 4-day balance. We've traded basically right near the upper end of that balance. The high of this bar is 1988.80. So I'm kind of looking at that as the upper extreme of the area of balance that we're currently in. 1, 2, 3, 4 days. We lost open interest yesterday. This morning we had some overnight inventory to the long side. Looks like that's already kind of been reconciled. Here's the 30-minute chart. Overnight longs still continuing to kind of reconcile those overnight longs. And we've got a gap. So again, if we can't close the gap, especially after an inventory adjustment, I'm going to be looking to buy weakness. Acceptance back in value from yesterday invokes the value area special situation play, where if we re-accept inside yesterday's value, probability states that the market would be likely to return to the previous day's value area low at some point in the session. So if we can get to here, then we may find some decent opportunities and ways to limit our risk. Here's the TPO chart. Still holding a gap. We have excess low, excess. Normal variation, neutral trading day yesterday, although it's kind of P-shaped, indicating some potential short covering, which is supported by the drop in open interest, which actually takes buying power away from the market with the overnight longs and inventory adjustment. Unable to fill the gap, we look to go to the upside. There's visuals all over the place. I would say the closer ones are below the market. Initial balance low yesterday. Nice excess on that low. Here's the euro. So we continue to kind of test those buyers down below that weekly kickoff low. We got a good look below it today, but that was after the British CPI numbers came out, which were a little bit inflammatory. But again, the market closed back above weekly kickoff high. It's still a support level. We are still, if you will, Rooster, pecking at this low. We are pecking at these buyers down here, and they seem to be very resilient as far as direction at this time. Here's the 30-minute chart. Pecking, kind of henpecked here, but the market recovered and has opened back above the weekly kickoff low here. So the pecking that we're doing has been doing very little to exhaust the buyers that are holding that level down there, right? So overnight inventory mixed along. This morning here sitting down, we're basically in value. A little bit of volatility, unable to maintain above the high from yesterday. We did not necessarily close the gap in regular trading hours from yesterday to the day before. We've got a naked point of control above. No real naked point of control below here for quite a while, but apparently there was a gap here at some point. It's still on this chart. Here's the TPO chart. Look at all these points of control we've tested down to in the last week. Now, where's the gap? There's the gap. So our overnight low kind of up against that gap. We going to fill it? Another couple of naked points of control below that, but that's kind of long time ago. Still important though. What did we do yesterday? We had a normal variation trading day. The initial balance was neither the high nor the low. More excess on the high than the low. Opening in range. We'll see if we reaccept value. We got weak lows a go here. Well, weak low, excess low. Fascinating. Watch the dollar. Here's the 10-year. All right. Finally, we see a little bit of relief for longs yesterday. A little bit of perhaps a little short covering yesterday. We added 6,800 in open interest yesterday. However, the 10-year, the treasuries are coming into rollover. There were approximately 600,000 contracts rolled from the June contract to the September contract just yesterday. Now remember, the open interest in the 10 years is over 4 million. But that's a pretty big roll yesterday. So now we're starting to get into where the 10-year open interest is going to be somewhat blurry, right? When we're getting rollover, it's difficult to read open interest in volume. We're going to be that way for a couple of weeks here as we roll our treasuries, and then we're going to be rolling our equities, and we also have gold, which is now in rollover. So keep that in mind when you're doing your research. So we have an excess low here on the daily chart below last week's low. I'm finding that to be kind of encouraging. Here's our look below. It looks like there was a naked point of control back there, but I'm not sure where it comes from. Weekly, a naked point of control, weekly kickoff low just below that. Overnight inventory, no. That's been resolved. Let's see if there's any help here on the TPO chart. Excess on both sides yesterday, a very even bell curve. Normal variation trading day. The initial balance was the low of the session. This tells me that this market has somewhat, to some degree, exhausted its ability to facilitate trade here. Price is going to go seeking new levels with which to be able to facilitate trade. The market has kind of shown its hand to the downside. As far as how good of a job it's continuing to do, obviously it's kind of fallen more into range than direction, and it is coming into rollover. So, that kind of puts in the back of my mind that the market is likely to, if things will allow it to, remain relatively range bound during rollover, because our bigger, longer time frame traders have a focus of getting a cheap or making money on the rollover versus losing money on the rollover. When you think about it, the 10-year is an expensive tick. If I have 10,000 10-years to roll, I could save myself 10,000 ticks just by getting it done on the bid or the offer, depending on what direction I have to move my contracts in. So, that's a pretty number, right? So our longer time frame are going to be kind of focused on rollover for now. What about the natural gas? We've got an inside day from a narrow day. The market is really kind of stuck back in this area of previous balance, seeming to be waiting for new information. But again, it is in rollover. We lost 1,400 in open interest yesterday. Look at the day yesterday. Well, range, value moving lower, couldn't test to this point of control. Today, opening in range and in value, it didn't. It opened above value. So I'll be watching the overnight high or the current regular trading hour session high to see if we can come into some sort of repair up to this level here, because this was very directional and there's probably some repair that needs to be done there. We also have the gap from over the weekend. Here's the TPO chart. Normal variation, extreme, excess high, low excess low, weak low, excess down here. Yeah, if this market, I think this market, well, of course it could do anything, right? Couple of, near visuals below, a little further on the visual above. Some days these markets speak to you. Some days these markets hide from you, it seems. All right. Chart language. Reset rule. Well, the new rule that came out isn't necessarily about resets. It's about daily loss limit. So from this point forward, if you hit your daily loss limit and you haven't hit your max drawdown, so let's say 11 o'clock today, your account, you're up 2,500, you lose 1,000, you hit your daily loss limit, the risk manager is going to take you out, and it's going to lock you out of your account until 5 o'clock tonight. You will not need a reset in order to keep your account valid unless you hit the max drawdown. As far as if you have another rule break or you broke a rule before that, upon your rebuild date for your trading combine, if you are invalid for evaluation, your account will reset at that time. So you don't necessarily have to purchase a reset. If your billing date is is Friday and you hit your loss limit today, I would wait a couple of days because your account's going to get reset anyway on your billing date for your trading combine. All right. Alrighty. So, well, looking forward to seeing everybody for Make Hogue Money today. Watch that delta in the S&Ps today if you're trading the S&Ps. The NASDAQ I haven't studied as much as far as, how often we do get a solid delta divergence. But from what I've seen, it doesn't seem to show up as much trading the NASDAQ. The NASDAQ is a little illiquid for it, and it's a crazy market. It makes me crazy looking at it. So, but watch if you were trading the S&P as the delta today. See if there's any hints of longer time frame trading, longer time frame traders. If the delta continues to rise and price doesn't or heads the opposite direction, our sellers may still be present. Have a great trading day. Again, looking forward to seeing everybody for group coaching, Make Hogue Money, and we'll see how the day plays out. Have a wonderful session. Be kind to yourself and others. Say a prayer for peace. Let's take our deep breath. Stay humble, grateful, creative, patient, and centered and tranquil in your trading today. Hoping that for all of you, as well as hoping for all of your success. Trade well today. Get out there and profit, and we'll see you in a little bit.